Cool. So hello, everyone. Thank you for joining us today at Your Overseas Home virtual event. My name is Ryan Timms, and I'm one of the hosts for today's event. For this session, I'm joined by Malcolm, who's representing Chase Buchanan, and he's going to share insight into the tax essentials of moving to Greece. So it's great to have you all here with us today, whether you're watching live or on demand. This event is designed to support overseas buyers and provide guidance and give you the opportunity to get your burning questions answered. So once Malcolm has shared his presentation, we'll open the floor to questions. If you have any as we go along, please type the questions into the Q&A area below and I can ask them on your behalf. So we hope to answer as many queries as we can today, but if we don't get around to them all, don't worry, Malcolm and his team will be available on the booth within the exhibition hall to answer any more questions that you have. So the exhibitors all have a wealth of information, documents and videos you can download from the booths to help you with your plans. So let's crack on and let's hear from our expert, Malcolm. Would you like to introduce yourself and share your presentation when you can?
Okay, hello everybody. Let's start by sharing the screen. Okay, I hope everyone can see that. And let's get started. Okay, so moving to Greece and the financial and tax essentials. So let's move on to the next page. Okay, so a little bit about me. Long on this, but my background is very much dealing with expats. So although I'm based in the UK now, I've lived in 7 different countries I think now, 18 years overseas. So everything that we're going to talk about today and everything you're about to go through, if you haven't done the move yet, I've been there, done that. That's thrown it away. So, you know, it's talking from experience. So, and I understand the opportunities and the pitfalls of moving to various countries, not just Greece. So, if I don't cover everything you want to talk about today, please just get in touch afterwards. My details will be shown at the end of the presentation. You can contact me anytime during the presentation. Okay, let's get on to Greece and find out what the good and bad things are. Okay, so let's start nice and simple with the income tax bandings. So up to 10,000 euros. There is no nil rate banding in Greece. You are taxed for everything up to 10,000 at 9%. From 10,000 to 20,000 at 22%. From 20,000 to 30,000, 28%. 30,000 to 40,000, 36%. From anything upwards of 40,000 is that 40%. Okay, so nice and simple. Next, the Greeks tax you slightly differently on a rental income. You have you've moved to Greece and you've still got a property in the UK that you're renting out, or anywhere else for that matter. This is worldwide rental income, just to make it clear, not just the rental income from anything you've got in Greece. Here are the following tax banding. Up to 12,000 is at 15%. 12,000 to 35,000 at 35%. Upwards of 35,000 is at 45%. Okay, this tax can be mitigated. Depends on your circumstances as to how we do that. You want to mitigate that, I'm sure you will do. Please get in touch after. Okay, and then we have the next one, which is all part of the whole income tax scene. Solidarity contribution that applies to total income. So up to 12,000 is 0%. 12,000 to 20,000 at 2.2%. 20,000 to 30,000 at 5%. 30,000 to 40,000 at 6.5%. 40,000 to 65,000 at 7.5%. 65,000 to 220,000 at 9%, and anything upwards of 220 at 10%. Okay, So what I've decided to do on the next slide, just go through an example, how those three work together. Because you're probably looking at that thinking, oh my God, that doesn't make it any clearer how much tax I'm going to pay. Well, let's go through an example and it will clarify things incredibly. Okay, so a Greek taxpayer has earned 40,000. Okay, so say you move to Greece, you're getting 25,000 euros from work and 15,000 renting out your apartment in the UK. Okay, so let's go through all three that we just spoke about. Employment income first. You will then pay 9% of everything up to 10,000. Yeah. Okay, you will pay 22% on the next 10,000 and 28% on the final 5,000. Remember, we're paying 25,000, getting paid 25,000. That makes 4,500 in terms of tax. Rental income. You'll pay 15% of 12,000. So that's the first 12,000 banding, and then 35% of 3,000. Remember, you're paying 15,000 here. Okay, so that makes 2,850. And then you've got the solidarity contribution, and that's based on the full 40,000. So you'll pay 6.5% of that, which would be 2,600. You then add all three of those together on a 40,000 euro income, you will be paying 9,950, so just shy of 25%. Okay, hopefully that example clarifies things a little bit. Okay, always ask me about it after, no problem. Right, property taxes. Let's cover that. There's three things to talk about here. First of all, there's the real estate transfer tax, which if you guys, any of you have already purchased a house, you will know about this. It's at 3.09%. Okay, and then there are two other annual taxes, municipal tax and the uniform tax. The municipal tax is levied at 0.025, 0.035% of the real estate's value, depending on the property location and age. And the uniform tax, which always makes me laugh because it's not very uniform, it depends on the objective value of the property, on its size, its location, surface, use, zone price, and age. So that's very bespoke. That's something you'll find out once you get there. But again, it's not particularly high, but just you need to be aware of it. And it's very bespoke for each. Okay, other taxes. Let's cover these. Now, these are really quite low compared to other European countries. So their equivalents in other European countries are usually a lot higher than this. So this is one of the attractions of moving to Greece. Capital gains tax, 15%. Withholding tax on dividends, 5%. Withholding tax on interest at 15%. And withholding tax on royalties at 20%. And royalties paid to the Greece resident corporations are exempt from that. Again, don't worry too much about these, even those, though they're not that high, there are ways of mitigating these as well. You need to understand your circumstances. If you're in this kind of bracket, okay, if you're getting dividends, if you're getting interest on your shares and so on and so forth, on your investments, capital gains as well on your investments, get in touch with me, and there are ways of mitigating these. Okay. Right, pensions. I spend a little bit more time on this because obviously a lot of people that we have moving to Greece are in this category, or if they're not, they're going to. Okay, so there's two things to cover. First of all is let's cover the new law that came, relatively new law that came in by the Greek government regarding pension. Foreign pensions regime is a alternative taxation regime. Retirees who have recently become Greek tax residents. So this is for people who used to be resis and now and other countries and are now Greek tax residents. Under this regime, their foreign income is taxed at a flat rate of 7%. And this can only be applied for a maximum of 15 years. So obviously quite attractive. Okay. Now, if you have a deferred pension and you're moving to Greece, then that's a different pension. If you've got one that's already in drawdown, then obviously you come under 7%. But if you don't have one in drawdown, then you need to speak, okay? Because then there are certain things that you need to do. So I'll give you a very short story with regard to that. So first of all, back in 2004, you have what's called European Tax Directive. And that was the freedom of movement of people, freedom of movement of capital. That was capital included. So back then, the UK government decided to make that directive law in 2006, often referred to as Pensions A Day. In the 6th of April 2006, you have Pensions A Day, type the stuff in Google, it all comes up. And from that day onwards, anyone who used to have a pension in the UK had the right to take it out, take it with them to their country where they were going. And the reason the European Union did this was basically out of fairness and trying to drag the pension system into the 21st century, because they are a little bit lagging in that regard. And it was really just they realized that people weren't working for 40 years in a particular company and then knocking it on their head and putting their feet up. They were doing 2 years here, 5 years here, 10 years there, and often they said, well, why is it? It's not fair that someone who's living in Greece should be taxed on their pension in the UK. They're living in Spain. Why are they taxed on their pension in Portugal, and so on and so forth? So, 2006, this law came in. What HMRC did not foresee is that this would turn into a massive, and just mushroom into a huge. In 2007, you had a few million leaving the UK in terms of pensions. In 2008, it turned into billions. Okay, and so this just absolutely mushroomed. Billions of sterling is leaving the UK with HMRC not being able to tax it directly. Okay, so basically, this is a law that they put in and they don't like French. So they have put continually over the years put restrictions on it and tweaked it a little bit. Now that we're no longer members of the EU in the UK, it's generally seen it's only a matter of time before they knock this on the head and stop these transfers out. So if you have a pension that hasn't been drawn down on yet and it's in the UK, you need to talk to me straight away. Okay, because otherwise it's going to be a lot of money if you don't. So get in touch with me, and my details are at the end of the. Okay, high net worth in Greece. So the alternative way of taxation of foreign income earned by an individual who has recently become a Greek tax resident. We're talking about very high net worths here. And under that HNMWI regime, individuals pay a lump sum tax of 100,000 a year. So obviously they need to be in quite a lot of money for this to be worthwhile. Okay, and it's regardless of their income. The regime can be applied for up to 15 years, then it reverts back onto the income scale that I showed you earlier. Don't worry, talk to me if you're in this bracket. My details at the end of the. Okay, inheritance tax. Yeah, there are a few countries in the EU that have a double tax agreement that includes this. Greece isn't one of them. So if you've moved to Greece or you're about to move to Greece and you think that HMRC will no longer be interested in you, you are wrong. They will be very interested in you as soon as you pass away. So because inheritance tax is not based on your tax residency, it is based on your domicile. Domicile is a very different kettle of fish to residency. So if you are domiciled in the UK, that usually means you have a UK passport. Those are not easy things to throw away. Or if you have any kind of connection to the UK, HMRC will argue that you are UK domicile. Okay, so we then need to have a chat about your nil rate banding, where you sit in amongst that, what that nil rate banding is, and then how much tax you're liable to pay above that nil rate banding. So we need to understand what that nil rate banding is. It's going to be different for different people. that's a bespoke compensation. But you're looking at 40% at everything above that. As I understand it from what a little birdie told me, it's not going to be very long before the UK government put that 40%. Yeah, they need to get hold of money. They're broke, so that's what they're one of the things that coming off inheritance tax. Okay. The good news about inheritance tax is there's lots of things you can do about it. So again, get in touch with me. There's a number of things that we can do. The only problem with it is you can't do it on your deathbed. You have to do it well in advance. Okay, so you have to have your ducks in a row and have your things set up, be that a trust or be that business relief or anything else for that matter. Have that set up well before you pop. Okay, so get in touch with me, speak with me about it. It's basically a voluntary tax that you pay if you like the inland revenue more than you like your kids. Okay, it's completely unnecessary. Speak to me and we'll set something up so you don't have to pay. Okay. And then finally, these are my details. Yeah. You all have to pay tax. You all understand that, but there's no reason to leave a tip. Okay, so when you move to Greece, all you need to do is make sure that you become Greek compliant. I can help you do that. I can help you mitigate all these taxes in Greece, not all of them, but some of them. The ones where I had the little red line underneath, and of course the inheritance tax as well from the UK. And that's it from me. Over to you, Ryan. Now time for questions. Fire away.
Yeah, thank you very much for that, Malcolm. There was some great overviews there and insights into the tax world in Greece. So as promised, there's now a chance for you to get your questions answered. I know it's early in the morning, so don't be afraid to get the questions in. So Malcolm, we actually have one question sent from Craig, and that is, when is solidarity tax paid and in what income?
Okay, so as per the bandings that I showed you earlier, it is paid at the end of the year, and it is paid based on your entire income. So based on income that you get from your work and income that you get from any kind of rental agreement that you have. So it's based on the full amount. Okay, and it's payable at the end of the year, at the end of the financial year. And the financial year in Greece is obviously January to December, okay, unlike in the UK.
Okay, perfect. So I've got some other questions here that we've pre-prepared. So do I have to pay tax when I bring my car to Greece?
Right, okay. As long as the car isn't less than 6 months old. So if you start bringing new cars into Greece, yes, they will make you pay a tax. But if it's more than 6 months old, no issue at all. You simply get it registered in Greece, and if I remember rightly, you've got 6 months to do that. Okay, so plenty of time. So yeah, so don't worry about that. But if you start bringing new cars, caravans, camper vans, that kind of stuff, they will charge you for that, because obviously what they're trying to do is protect their car industry and within the countries within Europe. Okay.
Perfect. So another question here we've got, at what point do I become a Greek tax resident?
Okay, nice and simple. That's very clear cut. So unlike domicile, which is smoke and mirrors, this is 183 days. So once you spend 183 days in Greece, that's when you become a Greek tax resident.
Okay, perfect.
Nice and simple.
Nice and simple, keep short and sweet.
Yeah.
So the next one we have here. So should I take my 25% tax-free lump sum from my UK pension before I move to Greece?
It depends. So when you're in Greece and you take your tax-free lump sum, you're perfectly allowed to do that in Greece. Okay, so but there are other countries in the EU where they don't allow it. They don't recognise it as a tax-free lump sum. So there is no pressure on you, unlike if you were moving to France. Other countries, right? If you're moving to Greece, you don't have a gun to your head saying that you have to take that 25% out. Okay, because you take it out in Greece and pay any income. Okay, just to make that, yeah. Different countries.
Okay, perfect. I think Malcolm, when you lean back a little bit, it's slightly
All right,
hard to
sorry.
hear. So yeah, so I heard the last bit. So the next question we have is, can I set up a company in Greece and put my UK tax properties in it to mitigate the Greek rental income tax?
No, you can't. They see straight through that. Nice try, no cigar. There is ways of mitigating it. Speak with me, okay? But yeah, that's not something you can do in Greece. They see straight through that. Won't be able to do.
So yeah, we've actually got another question from Craig. So we answered his first one a minute ago.
Yeah.
So he's just asked, so I've been told that I can reduce tax and reclaim VAT by building a new property in Crete through a limited company. Is this risky or within the rules?
Good question. A bit of both. Quite frankly, it is within the rules. You can do that, yeah. I would say yes, you can do that. Yeah, you can do that. The answer, you can do that. I don't think that the tax authorities in Greece would be able to challenge that.
Yeah, nice.
Yeah,
It's a good question.
Yeah, good question. Yeah.
So yeah, I've got another question here. So what is the corporate income tax rate in Greece?
It's 20%.
Okay, perfect. Cool. So we've got another question that's kind of come in as well. So what are the main tax considerations for someone who is looking to move to Greece from the UK? So what are the main considerations?
Yeah, basically, where's your money coming from is the first thing that kind of springs to mind. I mean, in the UK, obviously you've got that kind of nil rate band, if you like, for want of a better expression, up to 12,000, whatever it is. You don't have that in Greece. So where's your money coming from? Is it coming from your work? Is it coming from pension? And is it coming from rental and a rental agreement? Or is it coming from all three? So then you just have to sit down, take the tax bandings I showed you just earlier, and then do a calculation as to how much that's going to cost you, because you then need to work out whether it's going to be more expensive moving to Greece than staying in the UK. Look, there are other considerations. Finances, I get that. In Greece, the sun shines, and here it doesn't, right? So, and all sorts of other things, different lifestyle, all those sorts of things. But you need to just make sure that you understand how much tax you'll be paying. Where's your money coming from? Is it coming from rental? Is it coming from income? Is it coming from somewhere else? And then and is it coming from a pension? If it comes under a pension, then it's down to 7%. So that's another good thing. But are you getting income from other places as well? So you just need to sit down and do the mathematics, and the best way to do that is use my presentation. Contact me afterwards. I'll send it to you if you want, and you can go through it and do the calculation, or you can contact me and I'll do the calculation for you. It's quite straightforward. You need to tell me where your income's coming from. It's a kind of depends answer. It just depends on where your money is coming from, and then you have to just sit down and do the maths. Generally speaking, high net worths in Greece get away with quite a lot. Yeah, it's not like when I compare it to other countries, like France and Germany and that kind of stuff. High net worths don't get away with a lot there, because those sorts of jurisdictions, they're taxed quite heavily. In Greece, you pay a much less tax in that regard. If you're a high net worth, the only issue I would say in Greece is if you're not a high net worth, you're obviously paying that income tax up to 10,000. So that's a little bit annoying. But other than that, it's not bad for people who are not high net worths, but it's just that banding that's a little bit irritating to some. Yeah, but it depends. Answer. You have to sit down and do the mathematics based on the 3 slides I got. Perfect.
Thank you for that insight. So I know you mentioned inheritance tax before, but what is the kind of I know it's a big area to talk about and consider. So what main advice can you give regarding inheritance tax?
Yeah. So number one, you need to sort it out once you move to Greece. I mean, most of the people who are moving to Greece are either approaching retirement age or are at retirement age. You need to have really sorted it out before then, quite frankly. But if you haven't, then speak to me. It's a question of getting it done now, because otherwise, if you don't, your nil rate banding may be lower than you think, number one, and then everything above that nil rate banding taxed at 40% minimum. Like I said earlier, I think that's probably going up. So 40% on, let's say you've got a nil rate banding of 325, or let's say 500 grand if you've got it, if you've got property as well, and then everything above that gets taxed at 40%. So let's say you've got 1 million above that, so you've got 1.5 million in terms of net worth. That's easily done if you've just got a couple of properties. Then all of a sudden you've got a 400 grand tax bill, and if you don't do anything about that, then yeah, the inland revenue will take that money rather than your beneficiaries. Why would you do that? You know, so just talk to me. We can set something up that mitigates. Yeah, but it just depends on your attitude to risk and all these sorts of things. There's a lot of ways. Most people do it in a way that's obviously low risk. There are other ways of doing it which are higher risk. Business relief goes down that route. If you like more sort of high risk type of investments, I don't do a lot of that. I have done it for clients, but it just depends. It's very much dependent on the client. But if you want more sort of lower risk type of thing, you're going to be going down the trust. So I don't want to. It's really about making sure that you do it up as soon as possible. That's the main point here, because you can't do it, like I said earlier, you can't do it on your deathbed. It needs time to pass for you to be able to get any kind of percentage. Okay, and if you're going to go down the trust route, here's another bit for that answer. You're going to go down the trust route. Make sure that you keep the trust as simple as possible. Yeah, trust can get complicated. Yeah, and I do deal with complicated trusts. Got no problem with that. Sometimes they're a little bit difficult to explain to the client. So the more sort of discretionary ones, you change the beneficiaries as you go along. Not a big fan of those. You should really know who your beneficiaries are, unless of course grandkids. In which case, discretion is probably where to go. But yeah, keep them simple. You've got 2 types of trusts. You've got your bare trusts and your discretionaries. Bare trusts are the simple ones. So unless it is the UK one day, in which case we sell it. Yeah, but don't do it on your deathbed because you're wasting. Keep them as soon as you have them started. Okay.
Perfect. Yeah, thank you for that insight. So that's all the kind of the questions that we have for today. But to wrap up, could you summarize why people should seek professional advice when they move to Greece, and what is the best point of time to do this?
Yeah, so the best time to do it is really start talking to me before you make the move. Yeah, because then you can assess whether it's the right thing to do or not, from a financial point of view. Yes, it's the right thing to do from, lifestyle and all that kind of stuff. I get that, and I understand why you're on this seminar in the first place. But just make sure that on the financial side, most cases you're not going to have any issues. But in some specific cases, you may look at the finances and think, well, hold on, I need to organize that. So I've never had a case where a client has looked at this seminar and thought, oh, well, I don't want to move to Greece. Just need to, okay, what these things I need to pay, I need to speak to someone in order to do things and understand what the Greek authorities accept and don't accept along with. Yeah, so that's why you need to speak to someone like myself, because otherwise you go there, you don't do your preparation, and then you'll just get hit with nasty tax bills everywhere, from income tax, rental tax, all this kind of stuff. These are things I can help mitigate, and particularly inheritance tax and these sort of things. So it's just about getting your ducks in order, ducks in a row, and talking to me before you actually make the move. Now, if you're already there, talk to me again as well, because there'll be some things that I spoke about today, which obviously you so get in touch. But if you're about to make the move, it makes sense to understand what the financial implications are before you make the jump. There's no nasty thing. I can help forward.
Yeah, and as you can see, Malcolm's details are on the screen, so thank you very much for that, Malcolm. So that's all about we have time for today in today's session. So yeah, again, thank you, Malcolm, for sharing your knowledge with us today, and thank you for our listeners for joining us. We strongly recommend you get in touch with Jason Buchanan directly to discuss your requirements in detail. You can reach them at their booth today between obviously 8 a.m. and 4 p.m. The next session at 9:30 covers how to buy a property in Greece and the process surrounded by that. So do join us for that if you can. But yeah, thank you again for your time, and happy property hunting to anyone that's listening. So yeah, thank you very much for that, Malcolm. Some great insight there. And then yeah, have a lovely day.